financial inclusion, I believe, has the potential to transform lives. It transforms entire economies, and it does this by empowering individuals as well as small businesses. But as many of you in the audience know, 1.5 billion adults currently do not have access to bank accounts. They're outside of the banking system. They have no ability to transact, to save, to get credit, to get insurance. We know from experience how to widen that circle and bring these people in. But it requires a very purposeful focus, and it needs 4 ingredients to fall into place. The first one is people must have an identity, preferably a digital one. Kind of makes it easier and less friction. Second, they will then need the bank account. But then third, they need to use the bank account, because that usage is the 4th point, which builds the transaction history to gain access to credit and insurance. And that's the toughest ingredient of these 4. Now, for small businesses, and remember they make up 90% of all firms, and they account for 70% of total employment. For small businesses, access to credit, to cash flow, is a true hurdle in driving their prosperity and of those who work for them. Now, part of that challenge is regulatory. Rules in a number of countries penalize banks for underwriting based on cash flow. That's seen as riskier. So they naturally focus on lending based on the limited assets of their businesses, and that handicaps and stifles their growth. So the World Bank Group, what we're trying to do is to work on all those 4 elements and work with small businesses. So on digital identity, we're currently supporting more than 60 countries to get their people access to new or improved digital identification. On the opening and using of accounts, we're trying to construct social protection programs on top of a digital cash transfer system that ensures that those in need receive resources directly while combating corruption and waste. So as part of that effort, we've set a new ambition to work alongside partners to support 500 million people by the end of 2030, aiming for half of those beneficiaries to be women. So in addition to our work on the 4 main steps, however, we're also focused on modernizing payment systems and infrastructure to improve the lives of those that are connected and reduce friction, costs, and delays. We're helping to remove policy and regulatory roadblocks to boost investment in digital public infrastructure in DPI with fintech and fast payment systems, for which the bank has launched a dedicated initiative in now 50 developing economies to accelerate this progress. But of course, as you know, the real power here will be when we can connect across these blocks to trade allies, enabling lower FX fees and dramatically faster receipts of money for these small businesses. The thing is, to really build true resilience, I think you need to go further still. We need to increase the flow of finance, especially private capital, for entrepreneurs. Now, we've committed that we will try and get 80 million women with access to capital over the coming 5 years. We're also going to need new and more innovative financial products that are better tailored to a person's actual needs. I'll give you a couple of examples, but the idea is products that help them prepare for or recover from a shock better. You can do this by working with banks, fintechs, and regulators to help people access reasonably priced credit and insurance. We can help small businesses improve cash flow by using blended finance to incentivize large companies to pay their SME suppliers earlier, or to expand trade credit to the micro retailers that sell their products. And you kind of work on this to improve regulation as well, so that banks can lend against cash flow instead of relying on assets. My background in the private sector, I'm well aware of the fact that lending against cash flow is actually considered safer if done the right way than lending against assets. So there's a real opportunity here to bend the curve on the availability of credit. We also see digitization and AI-driven innovation offering a great deal of potential. So let me give you a couple of examples. The first one is anticipatory payments that leverage AI-based predictions of climate events, so you can enable a vulnerable household or a business to access credit before the shock hits. So they're able to prepare for it. Now, we know that on average, every dollar spent on prevention or preparation saves up to $15 that would have to be spent in recovery. A second example is alternative credit scoring, the kind of topic I was talking about just now, which can enable otherwise excluded to access credit without increasing the risk to the lender and to better tailor the credit, like I said, to the cash flow of the borrower. That means financial products aren't just available to more people, they are more useful to them. Across all these efforts, the better we do and the simpler we make it for users, the greater will be the adoption and the transparency in economies. And over time, that will what will really facilitate financial inclusion and resilience and change lives.